Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, we had a wild day in reaction to the FOMC today, and it wasn't the minutes that caused the reaction, it was Powell opening his mouth. We'll look at some short-term time frames, but essentially the psychology of the market heading into today was 78% chance expecting the rate cut that we got. So when that happens, we have to assume it's priced in for the most part, and that opens up the door for a sell the news event. I expected if there was going to be a sell the news event, it would be in reaction to the actual decision and the minutes. In reality, it ended up being a sell the news event once Powell started speaking. But where that puts us is, first things first, let's look at the short term. We had the initial reaction, which was no big deal, no changes, and then Powell started speaking, and we had an all-out collapse, and there was a huge dump there. I ended up scaling into SPXL in 2 positions, just flipped it for a very quick bounce, and we're now ending the day in a 15-minute equilibrium. High before the dump, low of the dump. Our lower high is going to be a key resistance into tomorrow morning, 299.30. Impressive bounce by the bulls, but they couldn't keep that pressure on the bears. If we saw a close at the high of the bounce, it would have been notable. Instead, we got what we would anticipate as the most likely scenario when you see a huge price range, which is equilibriums during new price discovery. So we're going to look for a 15-minute higher low compared to 295.20. If we open within the middle of the range tomorrow, we're going to anticipate a daily inside bar is probably likely. What is notable is we have lost the daily uptrend for the first time since the June low. So that's notable. And we're now going to be looking at the door opening up for plays in both directions more so than it has been. My rule of thumb has just been I'm not looking bearish if we're in a daily uptrend for SPY, and that's no longer the case. So we're absolutely looking for a weekly higher low to form. If we look at SPY, with where we stand right now, anything above 273.09 is a weekly higher low. So the bulls have a ton of space to work with. We could pull back about 7-8% before we get to that support level, and pretty much it would require a high volume 1 to 2% red day tomorrow if we're going to start questioning the weekly uptrend. Otherwise, I'm going to be looking for a weekly higher low to form. The question will be, is it going to be brief consolidation, looking for a potential bull flag to new all-time highs? I would say holding 290 would keep the bulls really strong, or is it going to be more of a significant pullback to perhaps 285, which would then set up more of an equilibrium pattern with a wider range? So that's what we're going to be looking at now, gauging what consolidation looks like. And again, if we're looking for key levels, 15-minute time frame on most individual names is going to have the key levels to be watching into tomorrow. If SPY bulls break 299.30 tomorrow, it will be very notable for that recovery. And if they don't, then we're still in consolidation mode. IWM, pretty impressive overall. We held the low of yesterday. So looking at it, again, the 15-minute time frame with the most clarity, there's your equilibrium. There's our ranges to be watching into tomorrow. 155.55 support. Top of the bounce was 158 on the dot. Daily uptrend, pretty much if we hold 154.71, the bulls have nothing to be worried about. If we lose that level, then we zoom out, and it would be a bit of a red flag. We could call 153.40 being lost a loss of the weekly uptrend at this point, if that were to happen. So we have our daily support level, and then right behind it is our weekly support level to be watching. QQQ, daily uptrend has been lost as well. Weekly time frame, anything above 169.27 is a higher low. The bulls have a ton of space to work with. Apple had a bullish reaction to earnings. We could pull back 10% in the Qs and still be in a weekly uptrend. So again, it's just a question of, is it healthy consolidation looking for continuation, or is it more significant consolidation looking for an equilibrium? And when we lose trends, we have lost the daily uptrend on QQQ and SPY. That does not mean we're in a daily downtrend. To confirm that we're in a daily downtrend, we're going to have to see a bounce attempt, an inability to break all-time highs, and then further continuation down below wherever the low stops at here. Wherever we find our base of support on the bearish reaction to the FOMC on the daily time frame, if we bounce, fail all-time highs, and then see further downside, that's when we're in a daily downtrend. So we're in a bit of an ambiguous space here. Are we in a daily uptrend? No. Are we in a daily downtrend? For me personally, no. So purgatory. XLF. So XLF on the daily time frame, still holding on, closing near the low of the day, but again, holding the low of yesterday. 27.78 is the most important support level for me. That was very brief consolidation, but it is our most recent higher low on the weekly time frame, and it's the lowest price we've seen in a month or so. So 27.78 is my line in the sand. If that level breaks, the financial sector bears will start showing me something, and pretty much that's what I'm looking at. And as far as resistance, it's 28.72. We've got the healthcare sector. So healthcare with daily lower highs and lower lows continuing. The weekly time frame has not found a higher low yet. Anything above 86.77 will be a higher low. So again, on now that we have this, shift and a change in momentum, now is when we want to be marking our line in the sand levels. So because I'm looking at the charts all day, every day, I don't do this, but have a piece of paper next to your computer and write down those lines in the sand. Write down the key weekly support, write down the key daily supports, and that just helps us stay focused and not too zoomed in on certain time frames, because you look at the 5 or 15 minute time frame and the world's collapsing for SPY. You look at the weekly chart and it's no big deal. We were due for weekly consolidation. XBI, bull break of 87.15, unfortunate timing, straight into the bearish reaction to the FOMC. So the weekly time frame is trying to give us our higher low. Most important support level is 84.03, and the bulls have to recover and try and make their way back up towards these recent resistances. The hourly time frame, a significant pullback. The 15-minute chart, same as everybody else. Are we going to see a 15-minute equilibrium holding into tomorrow, or are we going to drop to lower lows? Pretty much for bears to prove anything to us on any individual name, sector, or market, we have to break the low of today tomorrow. If we don't, that's a victory for the bulls, in my opinion. The VIX broke bullish out of our falling wedge. It almost looked too easy. Going into the FOMC, I said in the chat, are we really? Is it really going to be that easy for the volatility sector? But it was. So the bull break of the falling wedge taking place. Now the question is, how much follow through do we get? 1670 is the next level. Looking at the weekly time frame, I would anticipate a weekly lower high compared to 2340 is more likely than not. So again, same thing. If we're going to see follow through here, we need to see weakness with individual names breaking their lows of today, tomorrow, and strength in the volatility index breaking the highs of today and getting continuation. 1670 and 1980 are the two levels to be watching. Gold is on the verge of losing the daily uptrend. It has not happened just yet. It's a double bottom down at the support level. But if we break 1410 convincingly, 1400 is next, and then we zoom out to the weekly chart, and the bulls must hold 1381.62. And this move is potentially putting a halt to the breakout on the monthly time frame. Bulls must keep this weekly uptrend from here. So 1381 is the most important level, and the bulls have to regain the daily trend in their favor before breaking 1381 support. Silver also has lost the daily uptrend with this little lower high and lower low. So again, that's the difference between SPY and silver. You could say silver's in a daily downtrend because of the lower high and lower low. SPY doesn't have a lower high and lower low. This move is coming off of the high. So that's why it's different. That's why it's a gray zone, as we're not in an uptrend and not in a downtrend, whereas silver is in a downtrend because of the lower high, lower low. So we're just looking for a weekly higher low on silver. The bulls have tons of space to work with, anything above 1487. So those who missed the silver breakout and want in on the silver train, you're scouting for a weekly higher low to form. Next support level for me would be 1604. And we'll be watching to see how much pullback we get from here and whether or not the weekly time frame could be a bull flag, or if it's going to be more significant and be a tightening range equilibrium setup. NUGT, daily uptrend lost. We're now in a daily downtrend with the lower high, lower low. Weekly consolidation underway. Anything above 2414 is a weekly higher low. One of the plays that I like, I don't play, as I've said in recent videos, it's gambling in my opinion if you're playing earnings or the FOMC or inventory reports in commodities without putting in dozens of hours of fundamental research and having a lot of experience. So I don't do that. But I play pre and post those events. And one of the plays that I like most is, psychologically speaking, if we're running up into earnings for 3 big green days and it's 2 p.m. Eastern and earnings are after hours and we're in a solid uptrend, I like to play bearish to look for profit taking. I look for bulls who have had a great few days to take profit, to not gamble on earnings, and I look for bears to view it as a discount and saying, well, I can get a good price and look for some pullback. Likewise, if we're dumping into earnings, bulls look at that as a buying opportunity, saying they can get in cheap before earnings, and bears cover because they want to lock in their profit before risking the coin flip of the reaction to earnings. NUGT today was the same thing with the FOMC. We had an all-out dump where the 5-minute RSI was in the teens, the 15-minute RSI was in the low teens, and the hourly RSI was oversold. And this was all happening at 12:30 p.m. So knowing the FOMC is 90 minutes from now, we're absolutely going to be looking for bear miners to take profit and for bull miners to buy this dip. So this was an awesome trade opportunity. I traded NUGT multiple times today just for little day trades, but scaling in multiple positions into weakness. So I entered a couple positions on the way down and then scaled out on the way up and just locked in a short-term move playing counter the trend for 75% of the position I took. And then I set a stop level and left the computer to allow the play to play out a bit more, and then I sold the rest up here. So that ended up being a day maker, just that one little trade. But the point I want to make is the psychology of looking the other direction when we're overextended heading into an event. I don't play the event, but I play the preceding action because of the psychology involved in that setup. Oil, bearish reaction to the inventory report. So again, the weekly time frame is what I care about. I'm looking at the most important levels for me, 54.71 and resistance of 60.91. And as long as we don't break either of those levels, I'm keeping an eye on it, but not interested in any trades on oil. Natural gas bull is showing up today. So just like VIX was a falling wedge, we got to keep an eye on this natural gas falling wedge into the fall. So again, the fact that we broke support and saw no follow through for bears is a trademark of bear exhaustion and a bullish reversal pattern in this falling wedge. We broke 215.6 and we bounced significantly. Anything under 250 is a lower high. Like I said, I want to see one more rejection with a lower high compared to 250. Enter on that little higher low, bottom fishing our low, and then look for a bull break in later August. That's an ideal scenario. We'll see how it ends up playing out. So that's where we stand as we head into tomorrow. Watch those 15-minute equilibriums. Again, burden of proof remains on the bears. They proved themselves today, but the question is now how much proof can they show us? Can we break the lows of individual major names and sectors tomorrow? And I consider it a bullish victory if the answer is no. So daily inside bars tomorrow, if we get them, that's a short-term victory for the bulls. Otherwise, we see how much volume and follow-through the bears can put together. Hope you had a good day. We'll see you tomorrow.
So I'm babysitting the ducks while Mom is gone. I assume she's at one of the other ponds. So hopefully she's going to come bombing in here any minute. We'll catch her landing. Put a log for the ducks to hang out on. Looking good, Mom. Looking good, kid. Mom's calling you.